We're going to continue the conversation now with our market panel. Joining me here on set is Sri-Kumar, president of Sri-Kumar Global Strategies, and BNY Mellon head of investment analysis, Jake Jolly. Guys, thanks for being here. Sri, first off, are yields going to go higher from here, or should stock investors take a breather?
I think yields have gone up enough. 502, which was the peak, which we reached on the 10-year, John, last month, I think was the peak for it in the short term. You're going to have a lot of fluctuations from week to week, meaning, for example, the 10-year is 442 this afternoon. Can it go to 470, 480 before it comes back to 420? Yes. But if you're an investor who is trying to protect yourself from the equity market, and if you're trying to be looking with a 2-year or more time horizon, this is a great time for you to be in long-dated treasuries.
Okay. Jake, what if you're fine on protection and you're looking for some areas to take calculated risk? Where do you do it?
Well, I think, we still like U.S. equities. When we look globally, we look to Europe, we see weakness there coming, I think, sooner. The U.S. still has risks. But really, when we look at how the market has performed this year, a lot of people just look at the headline return and think, oh, it's been a pretty good year. But if you look under the hood, it really hasn't been as strong, right? You look at the other 493, and we're seeing low single digits. So I think
you're talking beyond the big seven.
I'm talking beyond the big seven. Yes, exactly. So I think when we look at there are opportunities, and that doesn't mean that there aren't still risks and that there isn't going to be sort of a challenging macro backdrop into 2024. But I think there's going to be pockets that do perform well, right? And just to give you one example, you look at healthcare, right? Healthcare sector has been struggling for most of this year. So I think there are some opportunities there, particularly when you look to 2024, if we really do get this hope for soft landing.
We get Medtronic reporting. Is that the kind of example, the names that were hit by the GLP-1 excitement?
I think so. I would say the reason that we really like healthcare is because it's this nice sort of nexus between giving you that defensive characteristics if we do get a recession, and also generally has a lot of quality factors, right? So there's strong balance sheets, robust, and we think that if you do get a recession next year, this is a sector that's going to hold up pretty well.
Sri, how should we think about the holiday season coming up? We got Black Friday just in a couple of days now. Is that going to drive any important economic data or give us information from an investment perspective that we should pay particular attention to?
Well, what we know, since you talked about Black Friday and it is related to retail sales and consumer spending, the latest fall in retail sales was not as much as expected. It was just 0.1%. The market had expected 0.3, 0.4%, which did not happen. And what it says is that despite the higher prices that consumers have to pay, they are still in the market, they are still purchasing. So I do not expect on Friday for it to be a really terrible Black Friday. It may not be as healthy as it was 1 year ago, but there is, I think, still quite an amount of stimulus in the market in the form of fiscal spending that came forth, and the fact that the monetary policy was so easy for so long. So what that means to me is that you're still going to have a decent Black Friday this Thanksgiving season. And the question is, as you go into December, as you go into the first quarter, that's where the question mark comes in.
I want to mention Zoom earnings are out. We're going through those numbers. We're going to bring them to you as soon as we've got them. It's higher in the initial move by more than 5%. Jake, earnings. This is one of those names, not by any stretch Magnificent Seven. This was a pandemic darling. It's been hit pretty hard. How do you evaluate these kinds of names for when an entry makes sense?
Yeah, it's tough. And I already mentioned that, the macro backdrop is still pretty challenging, right? So when you think about these names, especially names that are, on the growth side of the universe, they're longer duration, right? Which means that we think they're going to be more sensitive to moves in interest rates. Now, when we look to 2024, the Fed mantra, higher for longer, we do expect that rates are going to be high into next year, but we also expect that the trend is going to be lower next year, right? So I think that at some point next year, maybe that's not the first half of the year, but maybe towards the end of the year, those names that are longer duration, if they come through with some strong earnings over the next few quarters, they can actually end up performing very, very well, even if they've been beat up really coming in the post-COVID world that we're entering into.